to the TraderMerlin show. Yes, sorry, I didn't mean to scare everybody out there. Trust me, I was pretty scared myself. For those that don't know, I had COVID over the last week. Probably got it in Las Vegas at the Fish concert. There was just, 30,000 people, and everyone was masked and everything, but still hot, humid, sticky air at the top of the venue. It was pretty ugly. Oh, thanks, Margaret. You missed Gavin Newsom more than me. All right, that's okay. I'll take it. So I'm on the tail end. Hopefully we'll go through today's show without me needing to stop or pause, but my throat's still messed up. Some people were asking what it was like and how was it. It was pretty brutal. It's funny because I thought in 2019 I thought I had it because it was absolutely horrible, man. I was coughing. I assure you I didn't have it. Now I had it. The symptoms are pretty much what the textbook was telling you. The worst part for me, though, was the body pains. I don't know if anybody here has had it, but boy, the body pains, it felt like I was laying down on a bed of glass and just getting stabbed nonstop. Hard to move. My legs were like locked up and everything. High fever that was just bouncing back and forth for about 10, 11 days, and just starting to get back to normal. So goodness gracious, what a horrible disease. Anyway, it's good to have good to be back. I miss doing this stuff on a daily basis. I was going to try to do it while I had COVID, but my girlfriend's like, you're going to expend too much energy, don't do that. You need to preserve your strength. All right, fine. I had to listen to her, but we're back to normal, so or at least somewhat close to normal. All right, let's go. So lots of stuff I want to talk about. I'm not going to do an hour show, Big Eb, don't even think about it. But we'll talk about inflation because if you saw the Monday morning must-knows I did for Online Trading Academy, I mentioned PPI and CPI, the Tuesday and Wednesday reports. And, we've talked about it many times on this program on how my opinion is that we're going to see inflation get a little bit higher and higher. I laugh at the concept of transient inflation and feels like it's going to get even higher from this point. So those numbers came out. So let's just start there and then we'll move down the ladder and see what else we can talk about on today's show. So here's our inflation screen. Yes, all this stuff going up. Normally, the last couple times you've had the reading, when you take out food and energy, it hasn't been that bad. So let's look at those two side by side. Here's Consumer Price Index, which of course is what you and I are paying for goods and services. And we were at this level a while back. We saw it about 4 months ago. We had a 0.9 reading on CPI. It's just how quickly it's accelerated, right? It's just jumped right back up, which, I'm anxiously waiting for next month. I can't wait to see what happens next month's CPI numbers. So this was bad, but the more important piece isn't the CPI number itself. It's when you strip out food and energy. You can see here we were much higher than expected on core CPI, which to me, that is the big story there. If we start seeing things like food and energy are rising much quicker, generally food and energy are the most volatile components. And if you take those two out and we're still seeing increased inflation, then this could get considerably worse. And I saw a graphic yesterday or so that I thought was interesting to kind of put it in a perspective. This is for LA, Orange County, Inland Empire versus the nation. Okay, it's not an us versus them type of thing. I just think it's very telling as to how quickly this is accelerated. So what you're looking at here goes back to January of 2019. So we've got a little over 2 years, almost 3 years, and really starting in September or actually April of 2020. We were at much lower levels. The U.S. inflation rate it looks like it was sitting down around, 0.5%. And then all of a sudden, really accelerating aggressively to the upside. U.S. right now showing at 6.2%. L.A. Orange County 5.4%. But it's this move in that last year that, we look at a 6.2% inflation number, but what does it actually mean? And how does it actually impact us? It means that every single paycheck you're getting buys you less and less. And I think the big challenge that not just Californians because of this chart here, but everybody. I know you guys are from all over the place. A lot of us have our paycheck buys us a certain amount. We know that we can do X, Y, and Z with our paycheck every month, meaning I can make my car payments, I can make my mortgages, my rent, whatever needs to be done, and then I have money left over to go out to dinners and this and movie entertainment. And I know if you're budgeting, which you really should be doing to track your expenses, you should know kind of where you're at. And when you see that big of a rise, that means that for some people, they're going to be putting themselves into more debt if they try to consume the same amount of goods and services because their dollar buys less. The other side of it is some people may be cutting back meaning they're buying. So you either buy less or you put yourself more into debt. And normally what we have happen is people will continue to buy what they wanted, and they'll use credit cards and put themselves into debt, which to me is the really ugly piece, because that means a lot of people start defaulting on credit cards and maybe going to foreclosures and bankruptcies again, which brings us back to a 2008 kind of situation. So, just because we see these numbers spike like this doesn't mean it's the end of the world, but it is certainly getting rather aggressive. And we've talked about it at length before about what steps and measures the government and Fed will do to help rein in inflation. Now, to me, this is the best part of this whole story, is because it means that there's tons of opportunity out there. Let's take a look at some of our markets. They've been pretty good. I'm actually surprised the equity markets haven't sold off more than they did. I thought we'd see a little bit deeper dive on that inflation number, but let me see here. Got too many browsers. I actually did the Crypto Investor Live program this morning. That was a lot of fun. Okay, here's your dollar index. Okay, so a couple different things I wanted to address. And in the Monday Morning Must-Knows, I talked about shorting opportunities on the British pound and the euro. And one of the main arguments for that was the dollar was coming back up into supply, right? And it just looks stronger and stronger. Even though it's at supply, it was getting stronger and stronger. Well, the dollar broke out yesterday, and you can see a pretty nice follow-through move here. If we look at that hard red edge over here, the next logical stop that you have on that dollar index, let me get some horizontal lines here, is 96. So, that's not like it's a 10% move or anything. It's rather close, but there's really nothing that should stop the dollar index from moving up to that 96 level. Now, that said, take a peek at the euro, right? The euro at the same time broke down below those lows. And if you watch Monday Morning Must-Knows, that's where I had my line, was right on this Euro USD, right at 115.29. And all of a sudden we fell through that. You'll notice there is some demand zones a little bit lower, but the trend is your friend until the bend at the end. And we have multiple ways to join this downtrend. Number one would be to short any rallies up into supply, or you could go for the breakout trade. And in this case, we had that breakout to the downside and some nice follow through there on the euro and on that British pound. Now, the other piece of this, which is I think not getting as much of a talk track, is when we start to look at the yields. So here is your 10-year yield, which had a nice jump up on that CPI data. You can see today it's running at 1.596. So still short of that 2%. Right now, we'll probably have a little hesitation at this level it's at right now, then challenge 1.7 and get back up to 1.8. But if inflation is in fact as bad as they're saying, 6.2%, and PPI also is not doing that great, then what will end up happening is the Fed is going to start to stop their spending. They already talked about tapering, which should start next week. So we'll have Treasuries and mortgage-backed securities curtailed to the tune of 10 billion and 5 billion respectively. So that's going to start to stop the buying of bonds. Now, the buying of those bonds and treasuries, what does that do? If they're buying it, it props up that market and keeps the yields low. If they stop buying, it doesn't prop up the market, and all of a sudden those yields start to rise. And that's what we're seeing now. And I think that this is probably going to be getting much worse. My gut tells me that this kind of cup and handle or ascending triangle pattern you see here on the 10-year yield, we could see ourselves back up at this 2.5%, 3% mark if inflation continues to go. Thanks, Big Eb. I don't know if I'm looking good. I haven't shaved in a week. I feel grubby. I've been laying in bed pretty much every day. I just want to get out of the house and go do something exciting. Batista asked for that 6.2% raise. Good luck with that one. Right now, the job market, there's so many job openings out there. Let's see. Anyway, that's the 10-year. You go look at even longer, that 30-year. Fortunately, the 30-year didn't have as significant of a spike. You can see there was certainly a move up, but it still looks rather weak. It's the 10-year that concerned me because that is really the basis for the housing market. And if that housing market starts to slip or fall, then I think things really will accelerate. Because just like we saw in 2007 and 8, 9, a lot of people had paper wealth in their homes. And I have one friend in particular, won't mention his name because I'm pretty sure he's embarrassed. But in 2007, late 2007, he refinanced his home, took all this extra equity money and bought his wife new cars and jewelry and all kinds of crap they just didn't need. And all of a sudden, when that market fell apart, they lost everything, lost their homes, cars, etc. So, hopefully those of you who are a little bit more astute than that and realize you shouldn't be, pulling equity out of your home to buy you a bunch of crap you don't need, maybe buy investments or something with it, hopefully won't get caught in that type of market downturn. But if I do see these interest rates continue to rise, it can move very quickly. Now, one of the things, thanks, Raj, one of the things that's interesting with this, as we talked about, why hasn't gold been rallying, right? I was really in the camp of gold should be doing much better based off of inflation. And the price chart of gold was just kind of getting weaker and weaker. And I was saying, I'm just not that bullish on gold. Well, that has turned the corner. Here is the chart of gold, GC. And there's that downward trend line I'd had drawn in place for weeks. And all of a sudden we broke above it. So, now you're looking at that moment where it seems to be the risk off type of move, meaning money comes out of the equity markets and starts to move into those traditional safe haven assets. Things like gold is an inflationary hedge, could pick up some more momentum. Right now you're looking at 1864 on gold. Seems to me like 1900 is going to be no problem in just a couple of days here. Maybe not even a couple of days. Could happen by, who knows? Maybe even happen tomorrow. I think that'd be a pretty big jump for gold, but it could hit that 1900 here pretty quick if the inflation fears aren't tampered by our government. And as Gary just said, crypto is a new alternative. Totally agree. I absolutely agree. And, that's one of the reasons I'm such a big supporter of Bitcoin. If you ever wanted to see some really good videos on sound money, you can check out a guy named Robert Breedlove on Twitter or YouTube. He is all about money and sound money, and Bitcoin is that. So we have had a nice pullback in Bitcoin over the past 3 days. Let me just kind of zoom in here. But as we get more inflation and your dollar buys you less and less, I think more people will look at an asset that has almost a lack of inflation properties, right? Learn that from who? What do you mean? What do you mean there, Gary? Give me some more clarity on learn that from who. Yeah, I think so. And Big Ab, I think we have to be careful there when we say it's an inflation hedge, because lumping all crypto into the discussion, I think that's wrong. You look at something like Shiba Inu, that's not an inflation hedge. You look at Dogecoin, that is not an inflation hedge. Those are just trash. If you look at something that has a defined maximum, like Bitcoin, or you could look at something deflationary like Ethereum, and now Luna is doing destruction of their coins, then you start to benefit from a declining supply. Yeah, his name was Robert Breedlove. Robert Breedlove. Oh, thank you, Gary. Thank you, Les. Appreciate that. You gotta love that Bitcoin. Not only the Bitcoin trend line, but if you put something on here like moving averages, which of course I like with Bitcoin, you can see that there's that 50-period moving average. We've just been running. It's been sticking above it. It got a little bit extended, and then just drops back down here towards that trend line would be my expectation. We talked about this in the Crypto Investor Live program. I don't want it to sell off because obviously I love Bitcoin at all-time highs, but if it gets to 57,000, I'll be buying some more of it for the long haul. I've got a few $1,000s that just ready to be allocated and deployed. Is Bitcoin considered too big to fail? That's an interesting question. I don't know if I... See, here's the thing. If you look at something like a JP Morgan, a Lehman Brothers, a Bear Stearns, they get too big, but they're a company, right? A company like Bear Stearns is the sum of its parts, and if you have bad management and bad decisions being made at the C level, the company's not gonna survive, regardless of how good the product or service is. So this is different. Bitcoin's not a company, right? Bitcoin is wealth. Who's making the decisions there? There is no decision-making hierarchy. Who's gonna make bad decisions for Bitcoin? It is what it is, right? It's just a certain amount of circulating supply. Granted, there are some changes coming to the network that are going to happen in the next couple of days called the Taproot upgrade. But there is no bailout of Bitcoin, that's for sure. But is it too big to fail? No. I mean, it could fail. Well, how would Bitcoin fail? Bitcoin would fail if number one, and the simplest thing would be if somebody happened to crack SHA-256 consensus algorithm. If that happens, Bitcoin would be zero tomorrow in a matter of seconds. It'd just be straight down. I don't think that'll happen, right? Even with quantum computing, no one's cracked SHA-256. So how else could it fail? It could fail if something else took its place. And the big benefit that Bitcoin has now is it's Bitcoin. I mean, everybody on earth knows Bitcoin. They know the name, right? So if I come up with, Schmoopy coin or Dumdo coin or Merlin coin or whatever, and it's better, it's faster, it's more efficient, it's more transparent, it runs circles around Bitcoin, it doesn't matter. Unless the global community adopts it as they have Bitcoin, it's not going to survive. So I think right now Bitcoin has that huge competitive edge, and it's been kind of getting more entrenched, more legitimate by governments and now entities holding on to it. People were making fun of Michael Saylor for the longest time, and here he is, offering $500 million worth of debt to his company. He takes that $500 million, buys Bitcoin with it. Why? His argument's simple. He goes, look, I'm selling debt at 6%. I'm giving you 6% for money. And then I'm taking that money and I'm buying something that moves up on average 150% per year. This is free money for me. I'm thinking, that's kind of a brilliant idea. Unfortunately, I don't run a company with hundreds of billions of dollars, but he's doing it. And now all of a sudden people are looking at Michael Saylor going, you've got Elon Musk, you've got Cathie Wood, you've got a bunch of other big name players all holding Bitcoin. And now Tim Cook has said, I own some Bitcoin. For those of you who are still on the fence about Bitcoin and cryptocurrency, this should be a huge, thought process changer for you. Tim Cook runs one of the biggest companies in the world, and they have a massive, massive balance sheet of cash. It would be in their best interest to be holding Bitcoin over the long haul so they can get some price appreciation from their asset holdings. And if Tim Cook owns it in his personal account, I can assure you he's running through his head, how can I do this? Does this make sense for Apple? And if it does, I have a feeling you will actually see Apple holding Bitcoin, not this year, but I'm pretty sure they'll announce next year that they've been adding some Bitcoin to their balance sheets. And when that happens, now you're at 100K. Easy. Let me see what I got here. When I say crypto, I mean the quality ones. Yeah, Bitcoin, Ethereum, Yep, agree. Yep. Let's see. TLT is 20-year bond, I think. Yes. What is the ticker symbol for the 10-year? Ooh, that's a good one. It's not SHY. Shy is shorter term. Let me just real quickly make sure here. That's the 1 to 3. It's not JNK. That's the high yield. That's your junk bond. On the top of my head, I can't think of that one. Yeah, I mean, Ryan's right. That's the futures product. The TYZ21 is the futures product. But as far as an ETF goes, off the top of my head, Rob, I can't think right now of what the 10-year one is. Oh, you're going to drive me crazy. One thing that you do get from COVID is brain fog. I've been trying to do things today, and I feel scatterbrained sometimes. So, unfortunately, I can't think of the ETF that represents that 10-year. And Adam says 100,000 by the end of by December end. Hey man, I certainly hope so. It'd be awesome. That'll be great. Let's hope it happens. So again, we're in this really interesting time right now where you have inflation rising, and again, I'm just kind of those games where you set up all the dominoes, right? And one falls and it just kind of scatters and all these different things happen. Right? I love watching those things. Not the Rube Goldberg tricks, but the domino ones. I think for right now, it's important for all of us to start to think about what are those dominoes going to look like? How are they going to fall? We have not seen this equity market dump like I thought we would. Right now, this is your S&P 500. Granted, we've had 2 days of down move. That's nothing. Knowing that inflation is somewhat out of control, this really should have been a lot more significant of a decline. You look at the NASDAQ. Now, of course, NASDAQ took it a little bit bigger here. I think a big reason for that is Tesla. Of course, we all know what happened with Tesla. I mean, you just talk about a lunatic, man. This guy, I don't know if you guys were voting. I actually voted. He voted, he posted a poll on Twitter that says, basically, should I sell 10% of my holdings in Tesla? And overwhelmingly, everyone said, yes, you should sell it. So he's selling 10% of his holdings in Tesla. I love it. I think it's pretty crazy to put yourself out there like that, but that's Elon Musk for you. Anyway, it's funny because I'm not a big Tesla wanting to hold it kind of fan, but I was watching this level right around 1,000 and it came right down to it yesterday, and actually ripped through it and then bounced up and started to run to the rally to the upside. I almost bought some calls on it because you remember that Tesla and Elon Musk, he's done this before. He said once, he says Tesla is overvalued, which is like one of the most absurd things to hear a CEO say about his company. It's basically saying, go out there and sell the shares that you have. And of course, you know, the theory was that he was buying more up and buying it at a discount, whatever the case may be. But it continued to just rip and go through all-time highs. So, you know, it almost makes me feel like Elon Musk selling some of it would have been a buying opportunity, just because now you have some supply out there for the retail, and you know, Tesla looks pretty damn good. Anyway, that was a pretty fun one to watch and be a part of as I was sitting there on my phone from bed trying to be a human being and do some things as I was just sick. So what else do what I want to cover? I mean, you guys have some topics as well, but I think you've got some great moves in the currencies. You can see that dollar index. It looks great right now, and to me, it looks like it's going to keep getting stronger. We've got higher highs, higher lows. You've broken out of this most recent highs. You're kind of in uncharted territories. You know, do you end up getting to this 100 mark? I mean, that to me is where I think we're headed. We get to the 100 mark on the dollar. And again, if that happens, for those of you who are Forex traders in the spot or the futures market, you've got some great shorting opportunities for the euro. You've got some great shorting opportunities for the British pound. And of course, you could be looking at long opportunities on the Japanese yen. But I don't think that's as strong. Now, for Brendan, who's not here today, we can look at the Canadian dollar, which has been slowly rolling over. This doesn't have as clear of a direction as I'd like. You know, if I was looking for opportunities, I'd probably leave the CAD alone, and I'd be looking for shorts on the euro and the British pound here. They look just awesome. Most of his Tesla shares grants are at $6.40. Wow. Can you imagine owning something at $6.40 and, you know, yeah. You know, good for him. He did some amazing things. He did some absolutely amazing things, and hopefully he's not done. Hopefully he keeps on doing it. Okay, was it IEF? Thank you for putting that one in there. I don't remember IEF, but oh, there's your iShares 7 to 10. Yep, that will be the one. Thank you, team, for helping me get that one out. Big F says, do you think real estate will benefit from inflation? Maybe not if we get into stagflation. I don't think that real estate will benefit from this inflation. And the reason being, I think what will happen, remember, part of the direct impact of inflation is you can buy less. So now all of a sudden you might not be able to meet other financial obligations. So you start to put yourself in more of a debt position, and that may mean that you have to sell your home. I mean, you know, especially, well, I'm not so concerned about people who are using variable rate interest, variable rate mortgages, but the higher inflation rises, we can't buy the same amount of goods we could a year ago. We can buy less. And if that continues and it continues to rally like that, then we have a problem. And I think that'll ultimately end up hurting the housing market, because remember, it's twofold. If inflation starts to rise real quick, that means that rates are rising. If rates rise, then all of a sudden the housing market gets really unattractive. All right, no one's going to want to buy a home with a fixed mortgage that's 5-6% right now. I mean, it seems ridiculous, 5-6%. That's still historically cheap. But what if we got to 8 or 10? Right now, all of a sudden, oh, I'm only going to buy no home. I'm not buying anything at 10% mortgage. You crazy? So that comes to a grinding halt. And then I think all of a sudden things start to take a turn for the worse. Because remember, a lot of these housing markets have been propped up significantly because the Fed's buying mortgage-backed securities. That's a big factor in this housing boom. I mean, they are really helping these companies. And if you look at some of the home builders, here's Toll Brothers, for example. Right? Toll Brothers still looking rather decent. It's definitely traversing sideways for the better part of 5-6 months, but it still has that uptrend going since those lows. You look at something like KB Homes. Right? A similar picture, slightly weaker. How about Lennar? Right? These are all home builders. Now, home builders are still doing rather well. I was looking at it a while back, and they were starting to sell off, and that kind of made me feel a little bit nervous, like they're foreshadowing something. But right now, I don't think it's overly worrisome with home builders. I think it's still looking okay, but keep your eye on those. If home builders all of a sudden start to take a nosedive, well, that's a pretty good clue that the housing market might be taking a nosedive here soon. Institutions will know about it first, and then the retail people will find out about it and be holding the bag at the very end. That's typically the way that works. Tony says, been doing well with the shorting the euro and the British pound? Yeah, especially on that breakout, right? We had a nice bounce down, then bounced right off it. I think when I did the Monday morning must-nows, we were sitting right on this line right here, rallied up, and then just boom, popped through. Good volume, good follow through, and same thing for that British pound. Yeah, it's looking really good right now. No history with mortgage-backed securities. Well, I mean, that's a weird one. Is it DHI, Big Eb? DR Horton? Yeah. Or is it DR or DH? Either way, they all look pretty good. But to me, the challenge here with these home builders is the picture is not as strong as it used to be, right? I think we can all see that. It's not showing a continued uptrend. It's chopping, right? I can go back to some of these other ones here like Toll Brothers or Lennar. You know, there's no longer new highs being put in, which isn't the end all. It's just a little concerning, especially if the housing market was so robust. These should be making higher highs. All of these bad boys should be making higher highs, but they're not. So Lennar is probably the closest to it. All right, awesome. What else do I got? Yeah, Daniel says, let's not forget the rates in the 90s. It actually was the 80s. I think 86, he had 16% for a 30-year fixed mortgage. Blows my mind that would happen. But, you know, Volcker did some dramatic things. He had to raise rates significantly to choke out inflation. And who knows if that's going to happen here. Yeah, to me, I think it could potentially happen, but I don't think it'll get that high. You know, remember there's four kind of main classifications of inflation, right? You have creeping inflation, which is anything under 3%. And that's really what the Fed wants, right? They want it creeping, meaning you don't even notice. It's under 3%. And then you have what they call walking inflation, which is kind of where we're at now, which is 3 to 10%. When you get over 10%, that's what they call running or galloping inflation, right? That's most likely be our high point. Like if we got over 10%, I'd be pretty shocked. I don't think we'll get that high, but it could happen. And then the last category would be where you have 50% or more per month. That's hyperinflation. I don't think we're getting there, even with the amount of money that we've printed as a government, as a country. I still don't think hyperinflation's on the table. We're too developed, I think, to let that happen. They'll manipulate it so we don't have those numbers staring us in the face. All right, what else do we want to talk about? I went through kind of the big stuff for me. You know, there's some deeper crypto things, but we did that in the Crypto Investor Live this morning. We were talking about some parachain auctions, which is really cool. It's interesting stuff. First mortgage 14%. Wow, man, that's a piece of history right there, Mike. That's good. How do you plan on making your income weekly, monthly, or how? How do you plan on making your income? It's easy. So I've got many accounts. So I'll always be working. So I'll have an income stream, and I basically live my life off of income from employment. Everything else, I don't even touch it. I just let it grow. So I have futures accounts, I have Forex accounts, I have equity accounts, I have options accounts, I have, I want to say something like 18, 19 different crypto accounts as I'm trying all these different things. I actually just opened up some new ones today using a Polkadot JS Explorer so I could do some of these parachain auctions. Where am I getting my income from? Daily, weekly, monthly? To me, it's not needed as income. So, for example, I have about, I guess, $90,000 worth of Polkadot, just as an example. And that is currently being staked, making me about 14.6% interest per year. So let's assume it's $100,000 just to round up and make the numbers easy. At $100,000, 14.6% interest means I'm making $14,600 in interest just off that Polkadot, which means I'm going to be getting about $1,100, $1,200 per month growth in my account just for that. Now, if I wanted to, I could be taking that money off and using that to support my lifestyle or allow me to do things I want. I don't live lavishly. I live actually pretty mellow. I don't like to do a lot of very expensive things, and I always live within my means. So that money, that Polkadot, I'm taking that extra, let's say $1,200 per month, and it's rolling into itself and compounding. So now I'm getting 14.6% compounding, and that's when numbers really start to grow big over time. So that's how I'm doing it, Alvin. is knowing that I have trading accounts, knowing I have options accounts. Some of them I'm going to lose in, some I'm going to win in. The goal is to make sure that as a collective whole, I'm positive versus negative. And there's definitely been some hits. This group knows it. I'm not shy to say I've taken some pretty big hits over the past couple years shorting the market. Yeah, it happens. I've done it. But I've also had some great trades that would have offset all of those losses and then some. So to me, it's about spreading things around. And if you're trying to identify, Alvin, making monthly, weekly, or daily income, and that's going to have to depend on you. Each individual person has to figure out what their strategy is for bringing money in. One thing that I've found for myself is by being employed, it takes a lot of the pressure from trading off. I've traded before where my sole income was from trading, and I find I take too big of chances, I'm taking too big of risks, and I do better when I don't have that stress on me. So my trading accounts, I don't really worry about them because it doesn't matter. Like if I was to lose 100% of my trading accounts, I still would be okay. Now, of course, that's not going to happen. I'm not going to let that happen because of risk management. But my goal right now is to line things up so that I have a set amount of income streams going on with the crypto world. That's the main piece for me right now, is putting my entire crypto portfolio to work so I can be generating income. I mean, think about it. Let's say you have $1 million worth of crypto. If I can get myself, a 10% rate of return per year on that portfolio, that's $100,000 just for letting that money work. Right now, there's places you can go easily and get yourself 10% rate of return in the crypto space. So that would be my main focus, or is my main focus right now. Merlin, I see a large amount of projects with staking APY numbers that look crazy. How do these work if you know? Okay, that's a good one. So let me see if I can bring this one up. It would take me just a second to see if I can get the... So here's an example. Now, before I show this to you, I want to make sure you understand that there is palpable risk with this, okay? It sounds too good to be true. So, for example, here's one. This is called Hex, right? Hex is they call themselves pretty much like a first blockchain certificate of deposit. That's crap. It almost, to me, should be... you can't say that this is a certificate of deposit, because a CD, a certificate of deposit, is a product that is backed by insurance. It is SIPC insured. So you have protection there. That's why certificates of deposits don't make very much, is because there's not a ton of risk here. You look at this one, Hex stakes average 40% interest a year. And you're like, well, and it's a great comment, Adam. It's like, well, how do you justify that? Like, why wouldn't I want to go here? Well, number one is you have to use a swap site to get there. And again, if you know anything about swaps, there may be very illiquid pools here. This is all a liquidity pool that you have to buy from. So to me, it could be very dangerous. You don't know how liquid Hex is. And of course, we could make a transaction and see, but I'll do that in the CIL. This 40% interest, the reason they're making that amount, they're going to be paying you in their Hex token. So what they're doing is they're holding Hex tokens, and a lot of them, right? They have a huge amount of Hex tokens that they basically reserve to pay an interest. And the hope and the assumption is by marketing, by going out on social media and talking more about Hex.com and getting a Kardashian to mention it or something, that the price of the Hex token will rise and you'll make even more than 40%. My thing is, what am I really getting? I'm getting a token called the Hex token that does what? It doesn't really do anything, in my opinion. So I don't know. You look at these claims, and while they're great, I personally would not be buying this stuff, right? Yeah, I agree, Big Eb. That Hex.com stuff is risky. I absolutely. But when you see these rates, you go, are you kidding me? I can make 40% interest per year? Let me give you another example. Let's see, do I have it here? Oh, I don't know if I have it. I have so many sites, guys. I'm going crazy with how many. Let's see, where was that? No, yield farming. Let's just look at some other weird ones, right? Let's go to, I think it's Dracula Protocol. Or how about Pickle Finance, right? So here's another one where you could go in here and enter the app. And let's see. Jars and Farms. I'll also have to connect a wallet. And it's going to, unfortunately, I don't have it all set up here. But you can go out to some of these and they're going to show you yields and rates that are so, like 150% per year, 200% per year, 1,000% per year. Like what? How does that happen? And it's because they're using assumed compound rates. So I think in all these I have to connect. I'm just trying to hopefully find you one that might be really ridiculously high. Unfortunately, they're not showing me any. This is 12.4%. But to do these types of things, you have to donate or contribute a wide variety. So for example, you have to deposit Ethereum and Dracula tokens, right, to this one, to be in this liquidity pool. Well, nobody knows Dracula tokens. It's not that big of a deal. So all of a sudden, you're putting yourself into something that A, has very low liquidity, it's very risky, and while you might make 12.4%, you have another problem, which is called impermanent loss, where you could actually lose a good portion of your investment that you put into this pool. So there's a lot of risks out there. Big Eb, how about the more legit ones? Well, for me, it's really more about looking for the main protocols, right? So if I was to go out and look at CoinMarketCap or any coin ranking, anything that's outside the top 100, you should look at with a kind of raised eyebrow, right? Like, granted, they may be great companies, but they're not there yet. They're still in their infancy. And, that's where you get those 100x, 1000x moves, but is it worth the risk? There's a lot of different DeFi protocols out there that are offering crazy rates. I think I told you guys early on, I saw there's one guy who was offering a 6% per day. 6% per day. You got to know that there's some serious risk with that one. And as exciting as it sounded, I didn't want to even put 1 cent in there. Didn't even want to do it. It just wasn't worth the risk to me. So, Adam, I think that the overall thing with staking is you have to look at what is realistic, right? If you're going to stake a stable coin, something like DAI or Paxos or USDC or Tether, and someone's going to give you 30 or 40% on it, that seems a little strange. That seems like an outlier. Even getting something like 10% right now, which is what you can get for a lot of stable coins, is pretty good. So you have a dollar equivalent, a stable US asset, a dollar asset that you're going to be getting paid 10% on. That's pretty impressive. So I don't usually use liquidity pools or yield farming sites, Big Eb. It just hasn't appealed to me. I'm basically looking at staking and lending protocols where I can lend in one crypto or deposit cryptocurrency and the company lends it out and I'll get paid for that. That's generally what I'm doing with most of mine. I just moved $250,000 worth of Ethereum. That was a nerve-wracking transaction. And I moved that over and I'm getting 5.35% on that. So, every year I should be getting an extra, call it $11,000, $12,000 per year just for holding Ethereum. I was going to hold it anyway, but I'm getting that 5.3 something percent. And I might be able to make more elsewhere by doing liquidity pools or some yield farming stuff, but a little too risky for me. I'm just not going to do that. What platform can you recommend for staking better coins like higher market cap stuff? It really depends on where you are in the world. If you look at, there's apps like Celsius, Voyager, Crypto.com, Nexo, a few others that have decent rates. You can look at things like Kraken. If you're using VPNs, etc., you could go into Binance. Binance actually has some pretty good rates, but not for Americans. All right, what else do I got? Did you put a down deposit? I did not put a deposit in a RIP. I was really close. If you did, you got shares at $78. No, I did not. I wanted to. My truck's great, man. I don't have a reason to get rid of it. I actually want a full-size truck, so I may actually end up getting the Tundra once the dust settles on their new reveal and all that. Yeah, Skilled Stocksman says silver is rallying. Yeah, it's killing me because, of course, you guys know I was in silver and got out of silver, made a great profit, and all of a sudden I was just about to sell some puts. I think this may have been the last show I did with you guys, November 3rd. I was talking about selling some puts that day. I didn't do it, and bam, just ripped to the upside. Bummer. almost a $2 gain. And again, this is that inflationary move, and expect it to continue. Skilled stocksmen, I think you'll see silver and gold continue to rally. So, maybe buy some pullbacks. You see the moving averages are rolled over and now curling back up. Gold's got a great breakout, so I think plenty of opportunity in precious metals. I'm sure Brendan is probably loving it right now as this commodity market starts to take off. So, where am I staking that? Are you asking me where my Polkadot or my Ethereum? I actually moved my Ethereum to Celsius. And remember, I'm not staking it. So that's the big thing. You don't want to stake Ethereum. I would just recommend not staking Ethereum. But in lending sites like Celsius and Voyager and Crypto.com, you're not staking. You're just depositing it, and then they're borrowing it and lending it out and paying you. So I have been resistant to do any staking with Ethereum until they roll out Ethereum 2.0. Any earnings reports coming out there that you have interest in? Nothing really. There really wasn't anything this week that looked that exciting. I mean, there was a few announcements that happened midweek, but nothing that's really, the big stuff's out. All the big major names are out. I'll look at the calendar tomorrow. Earnings calendar-wise for tomorrow, you have AstraZeneca. That's pretty much it. All right, on that note, let me, as my throat's starting to taper off here and energy levels crashing, let me go and see. Here's what we've got cooking for tomorrow from an economic announcement perspective. Not a lot, right? You got the JOLTS job openings. You have University of Michigan consumer sentiment and inflation expectations. And then you have a couple FOMC things going on, but nothing that's over the top, crazy wild. But Big Eb, if you want Celsius, let me see real quick. I think I have a referral code for Celsius that you can use if you want. I think you get some money for it. Why not? You get a little bit of cash. Yep, I do have a Celsius one, so let me just copy that over and I'll throw it in the chat. If anybody needs referral codes for these crypto things, I have tons of them. I've got them for Coinbase, BlockFi, Nexo, Celsius, Voyager. I'm trying to stay with the US-based ones. That's really... All right, so here's the Celsius network. That's the referral code, so Big Ab, if you're going to open up a Celsius one, just go for that. That's that'll, I think, give you a few bucks worth of... I don't know what they give you, but they'll give you something. They'll give you something. Yes, Rivian market cap exceeds GM already. It's crazy. Yep. And again, this is normal. When you look at a new industry coming to market and the excitement around it is, off the charts. Same thing with .com back in the day. You're like, oh wow, this .com company who does nothing has a bigger market cap than JP Morgan. It's like, okay, they don't even have any earnings. Well, Rivian, I think, made $1 million, and they have a $100 billion market cap. I mean, crazy. Not sold vehicles on the road yet. It's bizarre to see it happen. Unfortunately, my attitude is don't get caught up in the hype. I like Rivian. You look at who's backing them, and I think that they will succeed. It's just a question of is it worth chasing it at these prices now? Up 22% today. Pretty impressive run at $122. So, all right, guys, that's gonna do it for me. I got to. My batteries are fading quickly. I'm 99% sure I'll do a show tomorrow, so I'll have a chance to look at the economic calendar and earnings calendar for next week. I have not really checked email much, so I apologize. But if you guys want me to cover something specific, let me know. Send it in at TraderMerlin@gmail.com. I'd be happy to. Steer the show down a specific topic. So if you have something you want me to address on tomorrow's show, hey, bring it up. Let me know, and we'll hopefully map out a show flow for tomorrow because I don't have anything really planned. But that'll do it, my friends. I made it 44 minutes. Glad to be back. Sorry I had to take so much time off, but that COVID's a real pain in the ass. Anyway, thank you guys so much. I hope you all have a fantastic remainder of your day, and I will see you on Friday. Take care.